So, important week ahead with non-farm payroll on Friday. UK's on holiday on Friday as well. So, what I'm going to do is I'm going to talk about some of the fundamentals, some of the market indicators, not the fundamentals, market indicators, the bellwethers. So, I'm going to start with the dollar, and then we're going to look at the Volatility Index, and we're going to look at the bonds as well, because that will show us the sort of mentality of this market as we speak at the moment. So daily charts, no indicators on this, just pure technicals on the dollar index. So this is a basket dominated by the euro and the pound, with a mix of other currencies to show the general weighted balance of the dollar. The reason why I'm showing you the dollar is because when we had this last sweep to these monthly pivots in the indices, we had this huge pull to the upside in the dollar. So the dollar was bought and saw this sharp move to the upside, and as the markets on the 23rd of March decided to reverse and pick up off the lows, so the dollar dip down. And then so during this April period, we've had this little twist, this little wriggle, which has taken us to just under this 50% level. So all the time the dollar is sitting here, and if it drops off here, that's one possible indicator, certainly not a given, but a possible indicator that this market could potentially hold up. But if we start to push above this 92.20 level, then I would expect to see further dips in the market. Why? Because it's still the reserve currency, that's number one. You've got huge number of a variety of ETFs that are traded in dollars, and if those ETFs need to be balanced, they will tend to, they'll be forced to rush to the dollar to balance those ETFs. So some of the ETFs, for example, the gold ETF in dollars, if that is dropping off, then they are going to have to buy dollars back, get rid of their gold, buy dollars back to rebalance their ETF. Okay, so if we now let's move to the volatility index, because this has been falling off as the markets have picked up, and then just the last couple of days we've seen a pick above 36. Now the way to look at this index is normally, I mean, if this index is nice and flat, then you're potentially not got very much volatility in the index, and it can at times be hard to trade the markets if you are just trading water and not got any directional push. So you can see back in August last year, we saw some volatility pick up, and as we came into a little bit choppy into the autumn, and then the volatility fell off as we ran into December end and saw that pick up. And of course, once the markets really caught fright, this volatility index just spiraled out of control. Now, the normal line in the sand for this is, at the moment, if conditions as we have at the moment, if we stay under 40, that's regarded at this stage, that's regarded normally as reasonably stable. If we start breaking above 40, then you're looking at potential extremes in volatility picking up again. So this pickup in the back end of last week coincided with a couple of days of selling in the Dow. So we're just, as we come up to the 40, we need to watch that and see if that can push up. Okay, so at the moment with just a couple of bellwethers we're looking at, we've got increase in volatility, we've got stabilization of the dollar, and well, the Fed last Wednesday were pretty much holding out and offering out more dollars to all sorts of people, a variety of businesses, just to buy enough space to get out, potentially get out of this critical situation, to buy enough time, I should say, not necessarily space, to buy enough time to try and get this, get over this hump and get back to some sort of degree of normality. That's the theory, but what are the markets doing? So if we now switch to we'll look at the DAX first, because what the DAX does, the rest of the market follows. And so what the Nasdaq does, the rest of the market follows. I think I said the DAX there, just not concentrating enough. Right, so we had a new push higher up here. We had a decent thrust up there on Wednesday, and which took me by surprise. I'll explain why that took me by surprise later on. Well, very soon, in fact, because we're about to move on to the dollar in a moment. And so on the Thursday, we then saw some selling, and Friday drifted lower into support. So if we now can't close back above 88.65 and attempt to break these highs some stage next week, at the moment the path of least resistance is down, looking for this to drift back into support 85.50, and then see if then of course if we close underneath this support, which is major support, then this is we are in for another bout of selling. We're coming out of the earnings season, having banks having done pretty well out of this earnings season, but some mixed results elsewhere, and we'll come on to that in a minute. It's one of the things that has got me interested in what's going on at the moment is the fact that, you know, what have we got here? We've got, you know, complete well, I say complete lockdown. We've got a substantial level of lockdown and inactivity, and we are potentially heading for some pretty horrible earnings seasons in the next period. And you know, we're obviously in the second quarter of the year, but as we get into the second quarter of the earnings season, then, you know, the real impact of this freeze of activity, where people are literally just buying what they need for once in their lives rather than what they want. You know, the fact that people only bought what they need saw this colossal falling off of the edge. So with no major revision in the lockdown and the impact of that lockdown still to filter through, it would logically, we should be, by my way of thinking, these stocks are too expensive at the moment in many cases, and we are seeing some selling off the back of that trend line, which is why on Wednesday, as we came out of Fed Day, I came out of Fed Day short, and actually, you know, closed my platform short into Wednesday evening, and was pretty surprised. I didn't put my house on, I didn't put a big position on it, but I certainly wanted to start to get short and then see if we could fall off into Thursday. We did fall off into Thursday, but not until they stopped me out overnight on a 200 pip push higher, and then subsequent this drift off lower. So at the moment, I would love to see this Dow push back into 24, anything with 24 100s, 24 4 or 5, and then see that drop off. So with non-farm, what I don't want to do is, and what I have to do in every aspect of my trading existence is not picture the trade and not preempt, not make assumptions, but expect the unexpected. So that's the only way I can survive in trading. That's the only way I can profit in trading. If I come into this on the basis that I have to trade what I see, I have to. I've learned from experience in my early days of the conversion from fundamental to technical trading. If you don't trust these charts, if you waver and start seeing things in these charts that are not actually there, in other words, assumptions and presumptions, then you will damage your account and not survive as a technical trader. So so at the moment I am just hoping that in the early part of the week we will pull back, but at the moment anything around the 24,100, just above 24,000 is saleable, with this fib level at 22,600 looking like a possibility if we continue this down move. Okay, so at the moment I'm looking to sell any rallies, any push higher at the moment, specifically as long as we stay under this trend line. If we subsequently close under 22,600, then again I think we could legitimately look for April lows down there at 20,800. Big ask, possibly. Take it one step at a time. As a day trader, I can afford to build a position and potentially hedge. So I did get short in the second half of Friday session and just scaled out as we came into the close. But again, looking for, as the market opens on Monday, just looking for and into the first half of the week, hoping that we're going to get some pullbacks. And then the second half of the week, as we head for non-farm payroll, I'll see if this plays out and then look for that to come lower. If we look at my 4-hour chart, so I've updated this on Friday. So we actually into the cash session. This has been typical of the Dow recently. This is why one of the reasons why I got stopped out, because what we are seeing is seeing some mixed signals. We actually came into the early part of the day actually with higher closes. And in fact, at 4 o'clock, 90 minutes into the cash session, we were actually still closing higher, albeit with quite a fragile move up there. But it wasn't until we got to 5 o'clock UK time, which is 12 o'clock midday Eastern time, did we start to see that selling.
Mike, can I say something?
Yeah, go on.
I think the story on Friday that I thought was happening was that basically Amazon and Apple had released results which weren't very palatable to the market. That Amazon said that their profits weren't as high as people imagined they might be, even though everyone's buying everything from Amazon. And Apple did a good first quarter and said they've got no idea what's going to happen for the second. And that then started to kind of crash and wobble. And also Trump said that thing about China, didn't he? Trump said that he might start imposing tariffs on China. And I think those three things together were what wobbled. That's what wobbled the market. My thing with the Dow and the Nasdaq, which I still can't quite get my head around, is that they're indices of certain baskets of shares. So if you look at the Nasdaq as an example, Amazon is a big player in the Nasdaq, so is Apple, so is Microsoft, isn't it? And so is Samsung.
Yeah.
Yeah. And Samsung had bad profit numbers. Amazon, so the component shares that make up the Nasdaq were all being buffeted, and therefore that's why the Nasdaq itself will go down. It doesn't go down of its own accord, does it? It goes down because its component shares are all going down.
Yeah, well, you've got two slightly different sides to this. You've got the you got the cash market, which literally just sits there and lines itself up against the basket of stocks that are in it.
Yeah.
And then on the other side of that, you've got the futures market, where you've got futures traders selling or trading, exchanging a fixed number of futures contracts. So there are two sides to it. So one can come adrift from the other if.
But then we're looking at these cash markets. So if you go back to the Nasdaq, for example, the key thing I picked up was that actually a lot of its component shares were being buffeted, and that's why it had that big pullback. Down to 8715, and that actually it just feel. I mean, a lot of the commentators were saying that they think that actually the only reason that the Nasdaq has gone up or the only reason that the Dow has gone up so much is because you've got a handful of companies that are doing incredibly well, such as Amazon, Apple, and Microsoft, and Netflix was one of them, and actually there's a hell of a lot of companies out there that are really, really struggling. So when you look at the Dow 500, is it the wider indices? There's a Dow 500? Is that right?
The Dow 500.
Well, there's a 500. There's a something 500 that looks at 500 companies, the top 500 companies, not the top one, not the top 30, because the Dow is the top 30, isn't it?
Yeah, the Dow is. Sorry. Somebody else talking.
Yeah, sorry, Mike. I think, are you referring to the IG Index 500 there? That because they do an IG Index 500 shares of Wall Street, which is different to the.
Right.
Okay, maybe it's that I'm referring to.
I wonder if that is actually.
Well, you got as Howard points out, you got the other indexes, the S&P 500. So, I mean, these are all slightly different stocks. The also the Nasdaq is weighted towards techs.
Yeah.
Not in entirety, but I'm sure there are some one or two not strictly technicals. S&P tends to be dominated by banks and financials, and the Dow tends to be dominated by industrials. Although of course it's not entirely industrials. So
my point is really that from my understanding of what happened on Friday, and obviously it was my understanding, so I want you to correct me, is that the market that up until Friday, the market was going up, that the big indicators like the Nasdaq and the Dow were going up, but that was mainly because you had certain companies that were doing so well and that their price, could do no wrong. And then suddenly on Friday, the market got a bit spooked with those companies and with Trump's announcement, and suddenly Amazon started, disappearing. I mean, Amazon really went down, I think 4 or 5% on Friday, which pulled down all of the key indicators. But the thing is, in going into next week, the big question is how spooked the markets actually are, and whether it was just a retracement, or whether it is actually, hang on a minute, there is nothing, the concrete that they were basing their decisions on isn't actually concrete at all.
Yeah, no, I get the question.
I mean, it's just, nobody could really quite understand why the market was going up so much when so many companies were in such trouble, but it seemed that the indicators were being held up by a handful of companies, and now those companies themselves.
I think, and even in the, from where I'm coming from, even in the even in the Dow, you still got some. Oh well, you got Apple in the Dow for a start.
Yes.
And you've still got, Goldman's and so on. But the bottom line is as in this environment, some companies, you've got several things going on. Some companies are from the virus. Uptick in the volume of laptop sales, so that should have helped Apple. You've got bargain hunters who follow, Goldman Sachs, who say to themselves, right, if Goldman Sachs comes down to a certain level, I'm going to buy that, whatever. So we used to have some techs, some bargain hunters, and overall, I think a lot of the market was just buying into the fact that not just the Fed, but the state was pumping in, was rebalancing the dollar, which was one of the key reasons that dragged everything down in the first place, because of this severe demand slump. So the rebalancing of the dollar had a major impact on confidence in stocks, and you saw a big inflow during April in stocks. But I think at the end of the day, and of course, as a result of that, as a result of what turned out to be quite a rosy April overall, we've got to the stage where a lot of stocks have just come right up into resistance levels, and we're seeing profit taking. So we're seeing the natural, but on pure technical terms, we've this nice push up here throughout a decent 3-4+ week period. It's just given a lot of people an opportunity to take money out of the market, just to take trades off the table.
So that's my key question, because I read it that actually there's quite a few sort of commentators that I was reading are saying this might actually be, quite a big burst in the bubble. This might actually be quite a thing, because it seems to have completely spooked the market. It was kind of going up, and suddenly it started to come down. I'm just wondering, you seem to be suggesting it's just a normal kind of retracement, and it's okay.
Well, I'd answer that question in two ways. First of all, I think cyclically, this is the time of year when you would normally see profit taking and money coming out of the markets anyway. That's point number one. Point number two is, in just pure technicals, I've been waiting for this market to get another leg down anyway.
Yes.
I think the market has got way above itself. We have a lockdown, and with money flow and anything outside of online buying and selling. I'm talking about anything from retail to other products. Anything outside of online has suffered. And I think one of the and we've actually got some major cracks in the economy that this push up here is completely ignored. And one of them is commercial real estate. Commercial real estate is one of the things. There's several things that are going to be almost unrepairable in this market, and so far at the moment in this uptick, the market has not priced that in. I was actually looking for, just to get back to pure technicals for a moment, I was actually looking for this, this is the S&P, but same goes for the Dow. I actually thought that these markets would only retrace 50%. So I'm quite surprised to see that they've come this far up anyway. So there's several compounding factors, but the technicals is what I'm determined to stick to, really, is the ones that are telling us that this market's basically just got beyond itself. It's overreached. And
I think it's a question of whether it gets through these resistance levels, because as you said, it's like, but I think it's just when you're looking at these indicators, it's also the underlying shares that are the key movers out there that are really important to look at as well. With the Nasdaq, if we look at Amazon, for example, you can see that Amazon has had a really rough Friday. Loads of stocks did. Tesla had a nightmare, didn't it?
Well, Elon.
It didn't help, did he?
Elon did not help at all. Yeah, my shares are too expensive. Wow. it's almost as it's a bit. It just moment. I'm just going to say it reminds me of Gerald Ratner. Yeah, there's probably some people are too young to remember Gerald Ratner's speech. Anyway, let's have a look at Amazon.
Can I ask a quick question about the Dow?
Of course you can.
Can we just go back to the chart where?
Yeah.
Where it would. I'm just trying to get the point on the Dow. if you're going to short it, because you were talking about shorting it earlier, would you? That's where is it? Yeah. So that drop, would you expect that drop to be from about? Would you expect it to drop to the 18,790 line? Comparable to where it's kind of dropped to already.
Sorry, you asking me where I'm expecting it to drop to? Is that what the question?
Yeah,
is that the question?
Because you said it was oversold, and I agree with you that it probably is overbought. Sorry.
Yeah.
But in the long term, if you're going to see it drop, are you going to see it drop to about 18,790? Is that the kind of just on the way that weight goes up, and then it pops through the bottom there?
Yeah, I mean, but at the moment, let's go to a month. Let's go to a weekly. Yeah, this is what my weekly looks like at the moment, because the weekly cuts out a bit of noise and just gives us a bit more scope to sort of look longer term. So my weekly, having had the initial waves down here in end of February, early March, I started looking at where we were on 15th of August. And you can see one of the key pivots down there was 18,655, which picks up on Trump's November period. So again, to keep the theme of the whole session on pure technicals, what I'm looking for is at least, I think I'm just taking this one step at a time. If we come back down to 22,400, which is in line with the sort of figures I was quoting off the daily anyway. So I'm looking for to sell any kind of rally at the moment. I started shorting on 2 occasions last week. One I got stopped out, and one I got a small couple hundred pips. But any push in the first half of the week into this level here, and I think next stop is 22,440, and then if we can't hold that, then we're looking at these levels. If I then refer to my favorite subject of Elliott wave, because the bigger the time frame, the easier in theory is to see wave patterns. So we have initial 1, 2, 3, 4, 1, 2, 3.
It's the backwards wave. Do you remember we talked about this the other day?
Yeah.
It's
1, 2, 3, 4, 5.
It's a 3 and then a 5.
Yeah. So I'm going by this weekly. I'm going to have to refer back to the daily because I've looked at wave patterns more on the daily than I have in the weekly. So sorry, you're saying Howard.
Yeah. The reason why I was saying that is the 2 bits of information. So Warren Buffett dumped his stock to below 10%, and the reports he's actually dumped all of his airline stocks.
Yeah.
And the fact that, despite the fact that Donald Trump has given 1.5 trillion, share buybacks by US companies have completely halted. So I just wonder if the whole thing is about to fall massively.
Yeah, I think the figures for the Fed and the state at the moment for US is well over. I think it's well over 2.5 trillion, isn't it?
Was it 2.5 trillion?
Yeah, it's way over 2.5 trillion. In fact, some people are even quoting more figures than that. And that's by my sort of back of a fag packet calculations, that's barely half of what's going to be needed to dig out of this. But the Fed, as with other central banks, have said the checkbook's open. So once we get further down the line, we're going to see some bigger numbers coming out.
And on the other side of just a fundamental, you have got for the first time this Gilead thing, haven't you? That Gilead's had its, had a positive result, and they're going to start 1.5 million vials of coronavirus cure or whatever. So
well, I saw a report in the last 24 hours saying that they've even I think there's at least 80 to 100 companies doing various high-level trials, rushing everything through. And Gilead said this weekend they had given out dosages of this in fact, they've given out all the dosages they've got available this weekend.
Yeah.
So
I mean, that's what the market went up on, didn't it? It went up earlier.
Yeah.
Gilead, and now it's come down on Amazon and Apple and the tech stocks. And the point, I think that the point that Walid is making is very valid, that, you know, you've suddenly got Warren Buffett, who's very respected, and suddenly he's saying, oh, I'm getting rid of everything. Is this going to spook everybody? Mike, you said you're going to go up. You're waiting for a push up before you go short.
Yes.
Is that right?
Well, I've tried.
If it keeps going down.
I'm shorting a couple of times last week. One didn't work, one did. But I'm just looking for.
You're looking for a push up.
This leg is very much unrolling already. So let's just hope. I hope I get some reasonable half decent pullback. I was looking at the who was reporting this week and data that's coming out. So can't see where at the moment we're going to get any leg up. But normally in a situation like this, you would get. I'm hoping that some stage in the week we'll get a whiz higher, I can short into. And like I said, my next. I'm looking for 22,590 is what's looking is the red line on this particular chart, but 22,440 was on my lower one. But quickly, back to the pure technicals at the moment. We've got a 1, 2, 3, 4, 5, 1, 2, 3 wave up here. So that's a 5 and 3 wave completed here. Then we've got a 1, 2, 3. So this is potentially wave 3 in progress. So So my key point is, if wave 3 continues and lands underneath there, then this market really is in serious trouble.
When we looked at Elliott waves, I think, I'm not sure if it's for the Dow or for the FTSE, but the first line you drew seems to make more sense, where you've got a 3-way and then a 5-way backwards. And that seemed to be, we saw that in a lot of markets that we looked at the other day. It was kind of Elliott going backwards for some reason, but I mean, it still has the 5 and the 3, but in this case, it's just the 3 and a 5, because the long leg down was the 3rd wave. And it just seems to be more. So, I mean, that would then suggest that you're up, you've got 1, 2, 3, 4, 5. You're actually the top point of the Elliott wave, the end of the 5 step.
So that's the 5 and that's the 3.
But I've got it the other way around. I've said 3 and then you go 5 and then you end up at the top of the point. So the first one is 3, the first way you drew it.
Well, we've got one impulse pullback.
Then 2, yeah, that's 2.
Then
okay, you've done
the bulk of the market joining in. Then we have a decent pullback here in this bar here, which takes us back into wave 3 before 1, 2, 3, 4, 5. So down here we end up at 5 on a key monthly pivot, and then we end up on a 3-way, which takes us up into to mid-April, and then we've already that's 5 and 3 up. So that's 5.
So
that's 3.
So we're coming into 3 now, aren't we? 1, 2, 3.
This is current. this is potentially wave 3, which is normally the most impulsive.
Yeah, the biggest. Which
is normally the biggest. So, and that at the moment, this is all panning out because these are narrowish bars. These bars are getting deeper.
So if it did turn into the thing that you've got to look out for, could you not look in the? This is traded in the Asian market and the European market, isn't it?
Yes. Yeah.
So couldn't you? I mean, wouldn't it be an idea to see where it goes in the morning before the US opens, and get short then?
Yeah. What I normally find is that the US traders don't like missing out. So to cut a long story short, I don't like normally shorting outside of US hours, trading outside US hours, because if you do get a move outside of US hours, whether it's up or down, whatever, as soon as the cash market gets going, they'll rip it back anyway. So what's the point? So I've always long since had the point that what's the point of trading outside of US hours if by the time the US market's open, they rip it back to wherever it was anyway. Now that doesn't always happen because on Thursday, was it Thursday?
There was one day last week when it didn't. It was Tuesday.
I think it was Thursday. We had a really nice sell signal about 11, 12 o'clock midday UK time. And the US cash market didn't retrace. It just sold from a lower level and kept going. So it doesn't always work, but most of the time, the day trading that we do factors in what may happen prior to the cash open and hopefully captures that movement and that pattern and behaviour in the market. So now and again it doesn't work. Now and again, the market just continues. And
but tomorrow's a really critical day, isn't it? Because if it cuts through that resistance level, then it's really, as you said, it's in trouble.
Yeah. Every now and again you get a really good Monday, really good direction on Monday. Most Mondays tend to be the market's just sort of wriggling and positioning. So that's why I'm hoping they'll wriggle and position and just pull back into backtrack and retrace into some of Fridays and Thursdays levels before tipping over. And let's have a look at some of the biggest. Let's have a look at some of the biggest components in the Dow and see if we can get our head round. See if that's going to give us a clue. Here's Apple for a start. Now Apple actually is still in the higher part of this zone. It's weak, but so if we retrace into 295, 290, 295 and can't hold, then I mean the path of least resistance at the moment is down. We only sat within, well, we breached Thursday's range, but we opened and closed inside Thursday's range. So there's definitely significant weakness showing through in that one.
Yeah, but that was after it had made an earnings statement, which wasn't very good.
Yeah.
I mean, they actually did really well considering they'd spooked everybody with what they said. I think Apple's probably the worst one.
Can I just ask, that arrow, is that the earnings statement or is that the Goldman Sachs downgrade?
On Apple. It's just a technical arrow. It's not marking a specific event or earnings or anything.
Does anyone remember when the Goldman Sachs downgrade came? I can't remember the date for that.
It was not last. Oh,
it was a 20% downgrade, wasn't it? It was going to drop by 20%.
I think it was not last. It was a week. It was not last Friday. The Friday before, wasn't it?
Yeah.
Well, this down day. Yeah, this down day was Friday the 17th. So at the moment, all they've done is retraced into the 17th of April bar, haven't they?
Okay.
So Apple have done well to hold up here, given all the.
It was the 17th. It was the 17th that they downgraded.
Yeah. And that's when this effectively gave us a sell signal. I find, as a general rule, it's not uncommon to have a, particularly in a decent stock like this, it's not uncommon to have a sell signal and then go back into that sell zone. So this is, I mean, the only way this is going to get out of trouble is to close above that, what must be 295. I'll check in a minute. But in the meantime, I think anybody who wants to short Apple, and I'm not one of them, I think there's far, far better opportunities to get short this market than short a stock, cash-rich stock like Apple. But anybody who's interested in that is probably trying to pick off these highs. If you're a bear raider on Apple, that's where I would, I'd have orders, I'd offer out. And at the moment, that's what people are doing. Question is, are they going to come back in Monday, Tuesday and close it above there, or are we now going to just rotate back to this downtrend?
Can we have a look at Amazon? Because I think Amazon's more story than Apple.
Before we go, I just want to look at Boeing, because Boeing's was the second biggest component before all this happened. This is awful, isn't it? This is.
That is drawing a picture of an aircraft, isn't it?
Yeah. Well, I mean that hard to see that coming up at this stage, but it's not cracked under the major support levels, so it's the confirmed next leg down, or the leg down is not confirmed at the moment, but it's obviously on a knife edge, and any close under 130, and that's really had it. That's really in trouble. There's cancellation of orders and all sorts going on, isn't there?
Yes.
Right, Amazon. I think the trick.
I'm sorry, isn't Boeing going to be? I mean, Rolls-Royce is saying that they're making 8,000 redundant, aren't they? Surely Boeing's in the same world as them, aren't they?
Yeah, I mean, Boeing for a long time, even when their MAX plane was, for months after their MAX plane was grounded, they carried on making MAX planes and stacking them in the desert, didn't they?
Yeah, yeah.
So they've got
the engines on Boeing's British, not British Airways. Are they Rolls-Royce engines or are they Pratt and Whitney?
I thought the majority of them were. I don't know specifics. I always thought they were pretty wedded to Rolls-Royce engines, weren't they?
They had the problem with the engine on the Dreamliner, didn't they?
I just wonder if that makes a difference to their robustness to this.
To Rolls-Royces or Boeing's?
To Boeing's, yeah.
Well, it says.
Because I can't remember, do Rolls-Royce provide it to Airbus as well? I can't remember.
No, Rolls was forced to up the provision for its compensation program for ongoing problems with its Trent 1000 engine, which is used on Boeing's 787 Dreamliner. But they pulled out of the race to provide engines for Boeing's new commercial aircraft in 2019. So basically, Rolls-Royce did provide engines for the Dreamliners, which had a lot of engine problems, didn't they? And a lot of them were grounded because of that. So,
is that the energy efficient one? Okay,
yeah.
Okay.
Well, this is Amazon, and
God, look how it went up. Oh, why weren't we long down there?
So, I mean, at the moment, this is just just basic support and resistance. 2185 looks as if we're going to see that fairly soon.
Where?
2185, which is the high of February 19. So it's a question of if it lands down, if that assumption pans out, are they going to hold it back here and wing it back up, or are they going to close it under there and start retracing back down to at least, and the midpoint here is 1925. So at this stage we've got some nice pin bar sell signals up here. We've got a lower close, so it's a question of, as that comes into focus, is that going to hold, or are they going to drag it down? So I would assume anybody's anybody, i.e. big money fund managers, sit on their hands and just give it a good few days, maybe even wait till the US jobs numbers are out the way, and then think about if they want to get back in that on pure technicals alone.
Okay.
Yeah, so a quick flick through. Let's have a back to what's going on in the Dow. So I'll just pick a very small handful of some big brands. So we've got Visa looking decidedly. I'm sorry, these charts are. I've got all these things up here. Just look at the big picture. So we've got Visa having a bad couple of days and about to make a decision where that wants to go, i.e. either side of that little apex is going to tell us. We've got Disney. Now, Disney that's pretty much on Thursday, day after Fed, that looks pretty much like an engulfing bar. Nope, we didn't quite technically engulf on Thursday, so at the moment this is still just a pullback. So we've hit. So this is common for all sorts of stocks, from both sides of the Atlantic, where stocks have come in, had a nice little run, it's Tina. There is no alternative. Bank rates are ridiculously low. Central banks and governments were shoveling money at the problem like it's going out of fashion, and now we've seen some profit taking, some reality check, and pure technicals who've hit resistance, and now we're just waiting for these markets to come back to support. And then so this is common with the, naturally enough, common with what I've been talking about in the Dow. Obvious, looks as if we're going to see some, well, I say obvious, technically it's obvious that we're going to see some lower closes coming to support. So it's where we are in midweek, Tuesday, Wednesday. If that pans out, are we going to close underneath these support levels and then see a real continuation back to the bear market that kicked off in February? Personally, I think anything that is not generating cash and not generating profits on an online model is totally vulnerable, absolutely vulnerable. So as we've I've talked in some of these sessions and midweek, we potentially got this sort of two-wave economy where techs and some biotechs and healthcares are potentially gaining from the virus, and anything to do with bricks and mortar and traditional transactions and older business models that particularly involve getting employees into buildings is potentially on the downside of this. And it doesn't take much of a brain to realise that you've got retailers and up till recently anything in manufacturing and oil, of course, this massive glut in oil. Oil is obviously completely separate. Oil is a completely separate issue at the moment because there's many other factors affecting that. We'll go through that a bit later on. But it's a two-tier economy, and that's where we've got. I think the markets are just in the process of balancing out what's going to happen in that tearing apart of the different sectors. But it's even, if you've got Amazon tailing off as well, Amazon and Tesla and so on, and Apple on the edge. I mean, that's why the Nasdaq's so important, because if the Nasdaq continues to close lower, then watch out for the Dow, because I think the Dow on a drop will be ahead of the Nasdaq because of the content of those particular indices. I mean, you've got McDonald's in the Dow. You've got McDonald's, Nike. I mean, who's buying $200 or $300 trainers or sneakers or whatever they call them over in the US? And
I thought luxury brands were okay. I thought luxury brands were still holding out.
Luxuries would tend to hold out because wealthy people have still got money and are still happy, getting bored and happy to spend. But even the staples are suffering. McDonald's and Boots and so on are suffering. Anyway, I think for the moment, what I'm going to be doing next week is just following that theme and looking as far as buying any stocks, obviously holding off and waiting to see what's going on. Shorting is concerned, definitely shorting any as I've already said, and looking at particular sectors, vulnerable sectors for any uptick. And we talked about JD Sports in the UK. UK is in terms of shorting, UK is way ahead of the curve because we come into this whole
We're more
situation.
good than anyone is.
Yeah, we came into this demand shock in a much weaker state anyway. And at the moment, I'm amazed JD Sports is still holding up, but I would start to get short now. If I can see 540, 550, I'll be shorting something like this with a stop just above 570, 580. So I think the risk-reward ratio is pretty good for this. If I can get, but if I'm going to short, I'm going to short as high as I absolutely can. So I'm going to offer out at a higher number. If I don't get filled, then I'll have to reevaluate. But I'm going to offer out up here and then see and definitely hold and add if we start closing under 508 on something like that. If we look at other, sorry, Jessica, you were going to say?
No,
you weren't going to say, okay. That's fine.
I think the thing with JD Sports is I see it as a little bit range bound as well, though, because I know you've got those, if you look from about April the 14th onwards, it just seems to bobble up to 550 and bobble down to 480 something, and then find its way back up to 550 and come back down, which is the perfect share actually, because if you can get in near to 550, which it seems to knock on the door of 550 quite regularly. So a little bit like EasyJet. I think EasyJet is one that is bouncing up and down in the tunnel. It goes from sort of 585 to 650, and I would have thought that something like EasyJet is a good one to get short on, because you can almost predict the range it's going to go up to. I mean, JD has only.
Okay, I'll just make a couple of, just reiterate. That's my risk on this one, and so I'm going to try and offer out at about 550 on that one. If I'm not filled, I'll look intraday on the 60-minute chart intraday as well on that, and then see if I can get that to close underneath. And like I said, I'll be adding to that because I've got my initial risk is going to be quite small. And my reward, my first stop would be 400 on that, if that works. And then if we continue to close under 400, then we're back down to the lows, and who knows? With 280, I could see that could go lower than 280. Anything can go lower than 280. Anything can go lower than its support.
I think on the fundamental side, I think the UK economy particularly, the story that we're going to see coming out over the next few weeks is that we're certainly going to head in for a huge amount of redundancy announcements over the next 15 days. That's pretty certain, because you have to give 45 days notice to make people redundant.
Right.
The furlough is finishing at the end of June. I think Rishi Sunak has made it quite clear that that is not going to carry on after the end of June as a general rule. It may carry on for certain industries. And I think that retailers, particularly large retailers like JD Sports, will be required to, not required, but they'll be told that you're ready to reopen, but you have to keep social distancing models within the store like the supermarkets have. Now, once that happens, those stores suddenly are going to go, we're going to close half the stores that we didn't want before anyway. We're just going to concentrate on our most profitable ones. We're going to make loads of people redundant. And I can see that we're going to have huge amounts of redundancy announcements coming out in the next couple of weeks, which will attract a lot of headlines, because a lot of people have said with the British Airways announcement, this is totally wrong. They're taking government money to keep people furloughed, and now they're making them more redundant. I think the issue is going to be that, so UK retailing, I think, is on bricks and mortar retailing particularly, is going to take an enormous hit over the next week or over the next couple of weeks in terms of confidence. And I think that the story across the UK is going to be, the government has said they put the economy into a induced coma. As they begin to come out of that induced coma, they're actually going to realise how much of a car crash we're going into. And I think that that is going to be a big thing for the UK economy, that suddenly companies, if they open these shops, suddenly they're going to realise that they haven't got any customers walking through the door. You see what I mean? They're suddenly going to go, hang on a minute, we've opened and nobody wants to get on the tube. nobody wants to go to, you're going to have to queue up outside to go into the shop. Their sales figures are not going to be anywhere near what they need to be. And I just think that suddenly these retailers are going to have a rude awakening, and that's when the real economic damage is going to happen. So I think going short anything bricks and mortar, you're probably pretty safe with it.
Yeah, as safe as anybody can be. Shorting, yeah.
I can't see that. I can see your supermarkets maybe will be okay in terms of profit numbers, but I think that the reality of what's happened is only going to come out in the next 4 weeks or so. Yeah,
I mean, and that I would go along with that, but it fits in with the charts that are already showing that anyway. And the markets tend to be always like to get ahead of the game as well, pricing that sort of aspect in to this. So, yeah, if we can get short some of these older business model type organisations and stay short. Head and shoulders, yeah, okay. I'm not. Head and shoulders is a good chart pattern. I don't have any problems with it at all. Just that I don't even bother looking for head and shoulders these days, because I just keep my charts so simple. Just like to find the level at which I think institutions and the herd are selling at, and try and get short with them on any rallies, tuck my stop away out of trouble, and then see where it lands.
Well, can I ask why that's a head and shoulders rather than a rising wedge?
Yeah.
It's you know what, you can, I'm sure you can find sort of 2 or 3 or whatever patterns. You could have people bullish and bearish people sort of confirming all sorts. Yeah, I'm not actually that bothered. Is it a rising wedge? Yes, it could be. It's about a bullish rising wedge. Is that what you're referring to?
No, I want to short.
Right. Okay. Yeah. If you just take away, as far as I'm concerned, that's the main important element that we should be plotting on this.
Only 4 days though, isn't it? Or 5, 10 days.
So what's 10 days?
Sorry, no, just looking at the time frame. I was just trying to work out the time frame.
It's a daily chart. Are you in the time frame as in the number of bars that this has drifted back from?
Yeah. So in terms of trying to work out what it is that you're kind of dealing with in terms of pattern, I don't know how important patterns are. I mean, there's a limit to them, isn't there? Otherwise, you start reading all kinds of things. Don't you?
The bottom line is, the basis of this. If you're going to keep your trading simple and try and get the best possible opportunities and stay in the game on the best possible trades, I just stick to support and resistance, because that 6-8.
Well, I falling wedge, not rising wedge. That's
okay.
My mistake. Sorry.
Yeah, no, that's okay. Well, yeah, I mean, what are we doing? We've got, if you're looking at some basic tick box analysis, here's the obvious sell-off, but then once we got, this was the gap down bar, so we gap down, this was the gap down bar, so for as long as they underneath this gap down high, so we actually gap down to 680, so all we're doing, a little breach, I have one breach above here, a couple of minor excursions above it. And then on Thursday, all we did was test it once more. So this 680 on this particular stock is a real fire line, what I call a fire line. So it doesn't matter what the chart pattern is, doesn't matter what the Elliott wave is. Short the heck out of 680 if you're bearish.
Yeah,
keep the stop out of trouble and leave it alone.
Yeah, but also I think if you go 585 on EasyJet, you're not in trouble. 680 to 585
yeah.
On the right size position.
And I think there's still time as well. It's like I said with my scenario, or trying to sell into any spikes higher or any rallies into this coming week, any pushes still into that sort of 620, 640 are still Still not too late to get in, as long as you keep the stop above that 685 or 690.
Yeah. I think if you buy easy just at 680, if you can get in as high as 680 and you can make a position work at 585, I think that's just easy. And I think that also when it gets down to 585, you could go long up to six something, you know, and that strikes me similar to IAG. They're almost range. I mean, I know you're saying go short on it generally, but I also see a bit of range bound in there. It seems to just
it's definitely, yeah. I mean,
that tunnel. If you look at the more recent, the last sort of April the 14th onwards, it's just gone up and down in that tunnel.
But I think, none of us know where it's going to go. None of us know it's going to be tomorrow, let alone 2-3 days down the line.
Yeah.
None at all. All we're doing is following.
It's a good,
a simple strategy with a simple risk-reward ratio, and we've got a well and truly established trend. And as the key for this, if you range that gap down bar, because that's the real litmus test, the real test. So the probability of this going right back to the lows and lower is going to dramatically increase if we close under 530.
Yes.
That's going to be the real test for this one. Close under 530 and they could just pull the plug. And if they pull the plug, what might happen? Oh, let's get the right tool. If they pull the plug on this, wow. You know what? I said we might see 40, about 4 or 5 weeks ago, I said we might see $14 in oil, and yeah, that was a bit tongue in cheek, but this could, over a period of time, who knows, maybe even well and truly into the summer and out the other side, come and see 132.
Oof.
Why not? I mean, it's come from 1430 to 407. Let's see. I mean, there's always two sides to this coin. There's always somebody the other side of your trade. So there could be traders out there thinking, well, Mr. Johnson's about to lift some restrictions.
Yeah.
If he lifts restrictions and Gilead find out they've got a wonder drug on their hands, then this could flip and fill the gap, and off we go.
But also, there's no restriction on airlines. They can still fly if they want to. I mean, you can't open a shop right now, but you can certainly have an airline going if you want to.
Yeah.
And they are flying. They're just money takers. But on the negative side, nobody has quite explained. I mean, all the planes that are flying are evidently almost empty, so people don't sit next to each other, but nobody has explained how you can possibly socially distance on a long-haul aircraft.
No.
But where are they flying to? Because even though we're open, a lot of countries aren't.
No, there are still, Mexico, for example, BA still got its service to Mexico running because there's and some of the German cities have reopened now, haven't they?
But I mean, how are you going after 4 weeks, 6 weeks work, going to go back to work and say,
can I have holiday? Exactly. Yeah, exactly. That's what I want to know. Yeah, that's exactly it.
So you're not going to do that, are you? No one's going to do that.
There's so many problems with airlines. There are so many problems. It's I mean, everything says go short on them. But actually, I mean, the other one that we keep looking at is IAG, and that's an interesting one as well, because that seems to be going.
Did you know, for example, that German secondary schools go back tomorrow?
Yeah, and churches were open in Germany today. Yeah. But I think Walid's point is very valid. You can't go back to work and say, oh, can I just put in a holiday request? In fact, I heard that Barclays has told everybody you cannot have holiday when it finishes.
Right.
Oh, is that what you call range bound, Mike? I mean, that to me looks
that's range bound. And sometimes I always find ranges are broken and triggered once they flip back higher. So again, sticking to pure technicals, don't be distracted by any closes higher and pushes back in, because they might flip this over 265 and still flog it to death and drop it.
Mm-hmm. Is that your market makers that you were talking about?
Yeah, it's just the way the market works. I mean, everybody's shorted the heck out of it here. If there are too many people sitting short here and the market makers want to get some volume back in it, they'll just shove it back up. Stop people, then they know where the stops are. They'll stop people out and then take it down again.
Okay.
So I think it's important when you've got markets like this, coming back to what the indices are doing. We've talked about, that's why Elliott Wave, this is where Elliott Wave really kicks in, because you see these markets wave back, and a lot of traders are thinking, oh, well, that's okay, I can get back in this now. And some are even getting back in at the highs as we speak. Here we are talking about trying to sell any rallies next week. Some traders are already contemplating or have even bought at these highs, and they'll sit in them even when the market starts to wave down again. Anyway, I'm getting off the point. My point is that once you've got an established trend, stay the right. You'll make more money trading the right side of that trend than certainly trying to pick a bottom. There are traders out there who maybe not been trading for that long, who will try and pick bottoms in this. My message to you is, what in situations like this, sell tops. Don't try and pick a bottom. And then if it doesn't work, back off.
Okay.
That's what I do, and that's what. So I'm just trying to sort of convey that sort of market behavior and that potential market pattern across to you, so that you don't get distracted. The only way this is the real this is what happens. This will have to open and close above here to have any hope of escape. So if we just come back into that zone and immediately close lower, that could be this range is this box play is complete, and the next wave of short selling could be underway. But if you open, the only way I would back off and not short this is if we open and close above 265.
Okay. Can you have a look at Carnival as well? Because I think that's in that same category of companies that are range bound and worth shorting.
And I think the other thing to bear in mind is if you look at past recessions and past down moves, I mean, going way back to the old adage of the 29 crash was actually superseded by the 30, what is it, the 30 or 31 crash. But people always, 1929 is stuck in everybody's memories, but the following way to the downside that happened 12, 24 months later was far severe than the actual 29 crash. And if you look at 0708, we'll look at 0708 in a minute. Let's just talk about Carnival for a moment, and then we'll have a look.
I know we're not allowed to say the word fundamental, but I mean, this has got a basket case of all basket cases, because they've got 8 million cruise ships. They've got cruise ships. And, everybody's read all those stories of people, granny dying on a cruise ship. So
this makes my point in time. This is a box play. So here's the box.
And it's I've gone up and down that a few times, that one. Yeah.
And so if you're in a box play, and particularly on a downside, the play is normally over once they get at least into the top half of the box, and then drag it down again. So this is a point in time. Everyone was short over here. They got short on the bounce, so we found some feet there. So that all the short sellers got out, and some bargain hunters came in. But all the market makers have done is taken it up. And then found another tranche of selling up here. So I would just on pure technicals, this could be any stock. It could be a bookshop. It could be any stock you like. This is potentially a box play, and the box is potentially over and done with on traders offering out in the top end of the box, and we could easily see 592 again. Now, if we come down to 592, this could be through and through. So we have one touch, two touch. If we, well, either we close and we keep going, or we get a little bounce, and then the fourth test just gives way. So you got.
But you've got enough gap in it, Mike, just to short it down to 8. Is it 860? The bottom of those. So I know the share, so I know all the numbers. The bottom of that, you see the midpoint, if you like. It looks like in your graph. If you just short down to there, I think you're on 860. So you go from 1003 down to 860, which is a far safe short down to there. No, halfway. Where are we?
All I've done is I've just...
Right, if you go from 10, where we are now, 1003 down to 855, you've got, if you're on a reasonable size position, you're pretty safe on that one. And then when you get to 855, just go long up to 1053 and then back down, just go up and down the lift all day. You know, make your money.
Have you been buying dips in this one as well then?
Yeah, I've gone up and down 3 or 4 times on it on Carnival. Yeah,
personally, that would. There's nothing in my trade plan that will let me buy that at any point. All the time around the 13.11 anyway. Okay. There's nothing in my trade plan that will let me buy that.
But you'd sell it.
But what I've just done here is I identified the fib zone. This 1140 was the high of the fib zone. Mm-hmm. So that's the outer zone, that's the inner zone, that's the 50%. So we breached the higher zone and immediately closed lower. So I would still offer out. I would still try and offer out on 1135 on that one.
What it tends to do is that the Brits sell it and the Americans push it up again. That's how it tends to trade.
Right.
I think.
Well, I don't care who's doing it as long as I'm on the right side of it.
It goes up in the American session and down in the British session. That's pretty much how it goes if you look at the daily charts.
Yeah.
But it's a.
Can I ask a question? Sorry.
Go on.
That box plays. So you've got people making their mind with two sides, buying and selling, as you're saying.
Yeah.
When you've got a company with no staff, 50% debt, order books for cruise ships they can't buy. Mm-hmm. Surely that is going down.
Yeah,
how long is it doing that, and why is it doing it? What determines how long it does that for?
Well, it's got a massive amount of capital. They put out an offer for 10 billion US secured on their cruise ships, and they offered 11% interest rates, and they were massively oversubscribed by people. I think the issue with cruise ships. Yes, yeah, it was when it went up again. One of those things, times it went up. But I think the thing is for cruise ships, there's a lot of old people that just absolutely love cruising, and they're still booking cruises now, even though it looks like such a basket case for business.
My partner turned around and said to me today, look at this, there's an ad for a cruise in this paper. What's going on?
Yeah, I mean, the thing is, although...
Why isn't that capital raise like RBS? Do you remember in RBS, just before it went to zero in 2008?
Yeah.
There was a raise, wasn't there? They raised about, what was it, 2 billion in capital?
I can't remember the numbers, but yeah.
And then collapsed completely. Why isn't this the same?
Well, their cruise ships are very valuable. I mean, the cruise ships are valuable if anyone wants to go on cruise ship.
But at the end of the day, there's always somebody else on. There's so many bottom pickers out there. There's a lot of people who think that there's a lot of people. There's quite a high percentage of Americans that think this whole thing is fake. The whole virus thing is fake.
Flu.
and the US, there are people protesting in London that the lockdown is outrageous and should be completely ripped up. So there's a lot of people out there who have got some sort of belief, whatever that belief is, that this stock there is a chance this stock could go higher. And there's enough of them.
Look at where it was before. I mean, it was up in it was $35 a share, wasn't it?
Yeah.
And now it's come down to $10 a share.
Sorry. So what information? Okay, so that's not. It's making up its mind, for want of a better description. What information would you be looking for to tip that over, or to send it sky high?
I wouldn't be
Because
looking
that's
for any information at all, because I'm a technical trader and all I'm doing is following a technical trade plan. So I'm not hunting for information that is going to tell me it's going to run up or run down. I'm simply following a very strict plan that measures my risk and takes me in and out trades. That's all I'm doing.
I mean, the bottom line is, though, as well, that if the US market generally starts to fall tomorrow, you know, as companies like Amazon, there's been a wobble on companies like Amazon. Suddenly, companies like Carnival, that everybody can see, you know, are much more basket cases. That although technically we're looking at a down anyway, that would reinforce the need for that down to happen, wouldn't it? I mean, it would reinforce the need for us to slide down.
Also, I want to draw a parallel between what's going on here and oil.
Yeah.
Because on a pure the way the markets function is, you know, we have a float. There is a float of stock in this stock. So Carnival have commissioned, I don't know, 1, 2, 3, 4 however many brokers to hold their float and distribute it to shares for people, institutions, or retail traders who want to buy and sell this. So there's our. Let's pretend for a moment there's only one market maker. There's the bucket of shares. If that bucket, if enough traders borrow those shares and sell them and short them, at some stage these guys are going to just want to take their profits. So the pure technical traders are out there buying back their stock to take profits, to close their short positions. So they have to buy their stock back to take profits. As they buy the stock back, you get a bounce. And then the market makers, hang on, let me finish. The market makers themselves are saying, right, you know, there's too many people short here. I've got no liquidity, no volume. I can't do that. I'm not going to carry on like that. I'm going to lift this price up and shake the short sellers out.
Okay.
So the function, and back to oil for a second, we had the reason why oil plunged to such depths, you know, $7 a barrel, which, you know, very, very few people out there expected anywhere near $7 a barrel, was a liquidity issue. The futures market was, the contract for the next futures market was coming to an end. And, you know, anybody who's holding those contracts towards the end of that contract, but just bailed out, completely freaked out, bailed out. So there are functional reasons why this market pushes up, not technical or fundamental, but functional reasons. You know, the functionality of the way in which this market operates, closed doors with the market makers, can force this market, you know, can force a very weak market to bounce.
Sorry, can you repeat what you said about oil that caused it to bounce?
It was the switchover from the April contract. The April contract was just drawing to a close, and because of the cost of storage, primarily the cost of storage, that anybody who held those contracts into the close just completely bailed, and caused this freak drop into the changeover to the May contract.
Because WTI, it has to be delivered, doesn't it? You can't roll. It
has to be delivered, yes.
Yeah. Okay.
So that's why you get box plays, because if you have functional reasons why very shortable stocks are bouncing up, you get you get these box plays and you get these retracements. But you can spot what they're doing with it generally through either, you know, bar signals or fibs itself.
Okay.
What is the short position on Carnival? Say that again.
Do we know what percentage shorts we've got on Carnival at the moment?
You can look it up. I haven't got the. exact source at the moment, but I'll come back to you about that. You can tell what in the futures market there's something called the commitment of traders, COT, and you can see what the COT is on any futures market at any one point. But there is a website out there that will tell you how much the stock is shorted. I'll come back to you on that. Does that answer your question? Does that clarify things?
Yeah, it does. No, it does.
Yeah. Okay.
Yeah.
Thank you.
Right. Now let's look at let's just look at some commodities now, and then I'll finish up because I've been talking.
Mike, can you just have a quick look at BP and BT?
Yeah, sure.
While we're talking shorts, because I think in the UK market I'm not sure whether the oil companies, Shell, BP, Shell had a rough old week, didn't it? So did BP. So is BT, poor BT.
I looked at this into the close, and it did have a bounce into Friday's close. So, but but that's left a horrible weak pattern chart with at the moment. I'm holding some of this,
but that's range bound, isn't it?
It's following the sort of same patterns that we've been looking throughout, isn't it? I guess we've seen so many stocks that are like this. It seems that every other stock has got this same pattern. Well, the better ones are above the midline, but
the UK stocks are certainly there. And as I said earlier, I think the amount of redundancies that we're going to start hearing. If BP starts saying, we're going to need to make some redundancies next week, for example, that's really going to impact on their stocks, because there's the confidence that is pushing these stocks back up is just going to be dragged straight back down. I mean, that to me looks like a good candidate to buy at 113.95, because it ain't going much lower, is it?
I don't know. Yeah, if I'm sticking,
there's a lot of resistance, isn't there?
Yes, that's how we need to. A lot of resistance at 136.5, and a lot of support. A lot of support.
So
got some support at 110.40, but the major fire line is 102.79.
And that's as low as it's ever been, isn't it?
I think it probably is actually. Yeah.
Oof. So far.
But yeah, believe it or not, I had this on the initial offering and only held out for about a week or two after the initial offering when this first came on the market, and it actually took quite a tumble about 3-4 weeks after it was floated, and it took about 2 or 3 years to recover to its float level after that, from memory. I don't know if I've got enough data on to show this.
It's one of the first ones, wasn't it?
No, I've not got enough data. One last, just very, very quick look at commodities. And I want to show you what happened in 07, 08.
Look at BP. Look at BP, please.
BP, okay.
Just because I think the oil companies are also having a right old wobble.
Yeah, I thought they might. I thought they might go on a little bit of a run, a relief rally, but at the moment they're still just suffering like everything else, aren't they? Looks horrible, doesn't it?
Well, range bounds again, handy if you're day trading, because
it's held up better than BT, but it's almost back to the midline of this box, isn't it? So it's the jury's out. Actually, if I just range zone this gap down bar, so we're just still inside the March 9th gap down bar.
Mm-hmm.
In fact, on Thursday we sold from the high of that gap down bar. So
what's the lowest point of the gap down bar?
It's 280, 281.
Yeah. Yeah, those figures really, because you've got, look at it, it's the lowest point in there is 280, isn't it? Look, it went straight back down to there. So, I mean, I would have thought, is it right to say, what's the top of it?
The top of the, well, the gap down high was 343.
And 281, yeah.
Yeah.
And it got to, what is it? It's on 300 at the moment. Yeah.
It appears to have closed at 335p.
I think it's, I mean, my sense of something like BP is if you can buy it at 285, 290, it's probably a good buy. Do you reckon?
I can only answer that if we get down there and we hold.
Right.
I'm going to set an alarm down there.
Yeah. It's not going to be long though, is it?
Sorry, say it again.
It won't hold for long down there, will it? It'll just come straight back up as soon as it hits resistance.
Wow, you're very bullish on this. I would only ever. Well, yeah, but it's on a bearish range.
Okay.
I would only ever even start to think about buying this if we came down to 281 and closed above there. But you're only going to get confirmation. Well, you're only really going to get confirmation if we open and close above 370, really. Because here we attempted to open and close above the box and immediately close lower. So we were very bearish on April 3.
Oh no, I'm only talking about buying it. I'm talking about buy at 290 and sell at 325. I'm not talking about.
Right. Okay.
I'm not talking about going very far with it. I don't think you could go up. I'm not talking about buying it as a long-term buy. I'm saying as a day trader, just get, a few bob out.
Yeah, I mean, I mean, certainly when it did push higher, it pushed higher with some false here and here.
Mm-hmm.
So the sellers, there's a higher number of bars that closed higher than sellers bars here. So it certainly had a good bash at holding up there.
Yeah.
But at the moment we're in no man's land at the moment. No man's to bear zones at the moment.
Yeah. Yeah. Okay.
So the jury is well and truly out at the moment.
Okay.
Right. Quick look through commodities and catch up with where we are on beans, because I love the beans.
You and your beans.
Me and my beans. I do like the beans. So I'm still buying dips at the moment. I like this chart pattern. It's got seasonal factors in its favour. I mean, I'm not loading the boat. I've got a full position, but I'm not. I would only start to hold more than the one full size position if we now start closing above 875. I'll buy pullbacks if we close above there. But you can see this is a major issue with beans. 860. We've got to close above 860, and then of course at 870 we've got this trend line. Anyway, I think that there is a reasonable chance that this could pop out of here. Why? Let's peel all this back. Why do I like beans so much? Because if you look at where we came from, 820, I think this little excursion underneath 820 could be the trigger that the downtrend is over. This refers right back to my box play again. What's the box play? The box play is if you end up in a big box, the bigger the box, the potential, the higher the potential this could work. If you are stuck in a big, long box, one signal that sometimes tells you're over the box is when they take it outside and immediately close it in. So they did it here, and we went on a run. We only got back to resistance on that occasion. Or actually, yeah, got back to underneath the middle bar. I went higher. So I just think I like the pattern. I like the box, and I'm willing to risk capital on dips here to see if we can at least get back to the midpoint, and potentially, if we break above 950, we could go back to 10 and 11 plus. That's why I like it, because it's a big box play. Okay, just a quick look at a couple of others before I move on. Sugar, I missed out on sugar. I was watching this one. I wasn't bothered about the sell down here, but it's picked up a bid on that September low, and it's just left a couple. It's gone up so fast. It's left a couple of gaps, so I'm just out of it. But I wasn't perturbed by all these lower closes. I set an alarm down there. In fact, my alarm wasn't triggered. That's what's happened. I've got an alarm down there at the lows. It's not triggered, and it's gone off without me. I won't use a. Well, it wasn't a swear word, but it was not the kind of language I want to use in public. Anyway, it happens.
Good.
But that's what to watch out for. You know, set your, you know, use the alerts on your charts. Try and, you know, if you're watching a lot of things, then just set alerts and see if you can grab something out of it. This is wheat. Let me tidy this right up. Yeah, see, wheat is doing okay. Lovely chart pattern. Struggled in the end of the into the close, so
Good time to buy, yeah.
well, it'd be interesting to see if we can dip a little further and actually test that trend line. So I'm going to set. So you're muffled, buddy.
So sorry about that. Wheat is at all-time lows, I think, isn't it?
No.
Well, all-time lows were, well, certainly the most recent lows I got here were 418 in last year. They're currently 516.
If you compare it on a monthly, I mean, I looked at this last week on a monthly,
right?
And it was. If memory's no, maybe I got that wrong there. Sorry.
So we had a good month here on March. Now in all the. So this held. This has got relative strength. Okay, I mean, yeah, it's a food product, so it doesn't necessarily react to a stock market, but nonetheless, the dollar was really strong in March. This has got real relative strength. Dollar was strong in March, and that, bear in mind, this is traded in dollars. That held up really, really well. So that increases my expectations on this. So look at the weekly.
Where would you suggest to buy then? Just
well, I'd love to see it come. I'd like to see it come touch 5 again, but
500, yeah.
If for $5, if it doesn't.
But then that's probably everybody's trigger point, isn't it? Because it's around 505, something like that.
505 is where I've got my alert on, because that will be a gap fill from 18th of March.
Right. So
technically, there's not actually a gap there, because we did come down to 509.
And it's going to go up to 5, and it's likely to go up to 80.
It's got the potential to go back to 586 plus.
Yeah.
So I'm going to keep a close eye on that. Coffee's long since gone, isn't it? Okay, now we look at this. This could happen to sugar. Look what happened to coffee here in 18th of March.
Ooh.
So this could happen to sugar. So there's a lot of gaps in sugar. So we had that nice little run up there from 9th, and well, the real run was 18th. That's a nice big run from the 18th. So we're back down here. If we start closing above 10,730, that could go on another little run.
Hold on though, is coffee affected by demand for people like Starbucks and co? Is that a big part of the market?
Let's have a look. I've put it down.
I like these commodities because I think the other thing that is worth pointing out is that a lot of the ordinary trading packages, you can't buy this level of commodities, you can only buy them through ETFs. So, you know, you've got to be into more of a professional package like the IG, for example. And I think that means you've probably got a different type of trader playing them, and you haven't made, you know what I mean? It's more serious paying them.
I think commodities are overlooked.
Yeah, I think that's good.
And season, it's the right time of year. The crop reports are out.
Yeah.
We're going to start getting. So we know the acreage, and so on. The variables, as I said before, is weather, dollar, and of course the state of the economy as well.
But is demand for coffee a thing? That's my question, because I think wheat I get, but I'm just wondering if coffee is going to be affected by these coffee shops.
I think I mean most people drink coffee, so the main variable is the dollar and weather from here.
It's a good buy though, isn't it?
So acreage is already factored in because the crop reports are out. So the other variables, the dollar and weather, are now getting priced in. So
this is probably the time to buy, would you say?
It looks that is a very strong trend line. If I tell you what, if we close under this last week's low, that's in trouble. But the fact we're holding up, this is a fourth test of this trend line. So we're closing higher above it. As long as it's well worth buying a dip at this stage, around about 106, 106.20, and you know you're going to be wrong if that gets under last week's lows, or at least, yeah, it's always a possibility of a stop run. But if we close underneath that, then that could signal that this is just going to roll over. But I think it's viable. I think that's a strong trend line, and if we subsequently close above 11.5, this could really run.
Is this an all-time low? Go back, because look, you're pretty low. It doesn't lower than this, does it?
I don't get a lot of data on this.
No, but if you go,
let's go back to yes, I have actually. It's going back to 74 on this.
Oh, okay.
Right, back in 02, we had back in 01.
74.
Yeah.
My gosh.
Interesting.
Okay, I don't mean an all-time low. Come on, you know what I'm saying. An all-time.
Yeah.
If you go back to 2000, I mean the current price at 10,656. How does that? When
that makes
that as low as it gets?
Going back on a monthly, that makes this chart even more attractive. We did actually close lower last month, so we definitely got to be careful. We closed lower last month, but we are drifting in a very, very interesting area.
It's not.
So, I think the most important thing with this one is to be patient and try and go as low as you possibly can on this if you are going to buy it. You know, if the market just freaks out a bit in general, not the coffee market, but if the market in general freaks out a bit in May, you could see some of these commodity prices dip further, and coffees with a lower monthly close could be one of those commodities. So another one, what I'm trying to get at is be patient and bid a lot lower, bid lower down, because even the weekly closed lower. So the weekly trend line is down there, close to 10, 200, 240. So I think take your time. Let's see if we can get some lower numbers in that. And the daily looks if it's holding, looks if it's due to go higher, but give it another day at least. Let's see where we are on Monday.
It's interesting. You can also buy ETFs in coffee, can't you? And there's lots of
you can buy ETFs in most things, can't you?
I mean, yeah, but there's also an index, isn't there? There's a coffee Arabica index. Is that what you're looking at, or you're looking at the actual? You're looking at the index, are you?
This is coffee Arabica index. Yeah,
it's the index. Okay, got it.
I'll double check that. I need to. I don't. My favourite commodities are beans, wheat, and corn. They're my favourite commodities. They used to move in tandem. They don't always move in tandem, but so I would have to do a bit more research in coffee. I'm not. Otherwise, my favourite commodities are gold, oil, and gas. Right, let's quick look at oil because I want to finish up now. Let's find oil, which is here. So we struggled on Friday. We were flat underneath this resistance. So I fibbed this from the $7.50 low to the 65.60 high, and we're struggling. We've gone right up against the March late March lows and stalled at the moment. So we need, if this is going to go further short to medium term, we've got to close above 21, this 21.20. Otherwise, we could drift back to 14.40, 15. So
I think there's a lot of pressure to keep that price above $20 a barrel, though, isn't there?
There is, but you know, we've got it's the next contract that they're saying is going to be the one to get out of the way, because it's the August contract that is at least $3 or $4 higher. So this is an average. This isn't showing the this is a rollover contract. This is not showing the May contract. We've got to get the May contract closed. I think it's that way around. Whatever this, I'm sure it's the May contract that's in function at the moment. Yes. No. Must be the June contract, because the May contract is going to finish on the 20th of the month, I think. Anyway, I'll come back to you on that. I haven't traded oil for a few weeks with all this volatility. Well, not on the futures anyway.
The June contract is dated May the 21st.
Yeah. Okay.
That's
that makes sense.
But there's also the June 21st out there now. Yeah.
Yeah. And I think even the August contract's out there. I think it's the August one that's got the $3, $4, $5 higher, I think.
Tell you what, there was a very interesting move on US oil ETF.
USO?
Yeah, it went from $2 to 20 like in about an hour or something. I don't know.
This is the one to watch if you. This is what's that? It's gone back to the Nasdaq. Why is it gone to that? USO. Where is it? There it is. Ooh, blimey, that's horrible, isn't it?
It went. You see, it went down to 2. Put it on a daily, a weekly, or something.
Right. According to this,
it went to 0. It went to $2, and then it went back up to 18.88.
Whoa!
I wish I'd been there when it was on 2.
Wow.
It was on, yeah. I think you've got to put it on a longer perspective. Yeah, put it on like a month.
Well, that's an hour.
Yeah, but hang on. No, don't do it over 6 months. Oh, hold on. Is that for just...
It's not showing the $2 for some reason. Anyway.
Maybe.
Right.
But isn't that because you get some more leverage?
Every time you come on, Wade, you go muffled and then you go really clear.
Sorry about that.
Take your face mask off.
Is it because the ETFs are more leveraged that it does that? Or is it because more people were short for that on ETF?
There's a whole story with US oil, isn't there? That they've had all these suings going on because they've had billions of dollars.
Yeah, in terms of...
Sorry, Jessica, what was that?
I think there was a whole series. I think when the oil price tanked, US oil was going up, and people were piling in. It tends to go the opposite way to the market, and people were piling into the ETF. And I think there's a whole load of people that have lost millions and millions of retirement funds have lost a lot of money, and I think they're all suing. Isn't that the story?
These ETFs, the way in which some of the ETFs are managed and the way in which they operate can be very dangerous, because some of the ETFs are paper ETFs and not even asset based. So therefore they're prone to extreme movements. I'm not sure. I thought USO, being such a massive fund, was asset based, but I could be wrong.
I think it's the mum and, yeah, I mean, they've said, and there's a piece in Bloomberg about it, mum and pop brush off Wall Street's USO warnings after 80% drop. Warnings are blaring everywhere about the dangers of owning the US oil fund, the star-crossed security for tracking crude. On Main Street, investors say they understand the risks and aren't deterred by them. Retail investors piled in as oil prices plunged amid an unprecedented supply glut. But the ETF's popularity with mom and pop fanned concern that individuals don't understand the structure of USO, which tracks futures rather than just the price of oil.
Right. So it tracks futures rather than owns.
Yeah.
Futures. Right. That's. I think that's the problem. Yeah.
And they've said right now USO as well as crude is dislocated. When it's dislocated, there is an opportunity, said London-based Shukla, whose main source of income comes from owning several tech companies. Once it comes to normal, I might move to trading my futures rather than USO. He spends 3 or 4 hours a day trading from his at-home battle station, this guy Shukla. He is amongst the thousands of individuals who have poured money into the ETF in recent weeks. The number of investors at retail trading platform Robinhood holding it spiked above 220,000 this week. That compares to 32,000 at the beginning of April. So it's probably worth having a look at. It's in Bloomberg today. It's on the article is dated 2nd of May, so yesterday. But yeah, I think that there's a whole story about US oil, but it might be something that's worth. I'm certainly got it on my list of things to look at, because I think it's certainly it's one that I think is becoming almost like a crypto. The way I kind of understand it, it seems to be attracting huge amounts of attention. Yeah.
Okay, listen, I'm gonna wind up now, guys. Any
You're going to do gold, just gold.
Okay.
Keep you going.
Thanks, Mike.
Yeah, it's sort of it's just 17, isn't it? 1700. Sorry, it closed underneath it on Thursday, then tried to close above it on Friday. Potential bull flag. Bearing in mind, for my money, it's all down to the dollar. It's at the moment the dollar's staying low. There's a risk that if the last time the market got freaked out, dollar was bought and this plunged with the Dow, with the indices.
Mm-hmm.
So would I buy it now? No. Do I think it's going to go higher? If the market it's normally a safe haven. So if the dollar stays low the next time the market plunges, this could push up. It's not clear. We're sort of sitting up in dips are getting bought in this little bull flag, but it's not clear. I tell you what, if it really comes down, the way I've been looking at this over the last days and weeks is I would much rather buy it down there at 1640. But
you were holding oil. You were holding some gold. Have you?
I did. I've traded oil a couple of times.
Gold. Sorry, you were holding some gold. You were talking.
I took gold off. I bought the dip down here in the 1680, 1690. I think I sold it at 1730 up here.
Okay.
And I've not traded it since. I've just left it alone.
Okay.
Because I think it needs a good deep pullback to shake out some weak hands and get some volume back in it.
Mm-hmm.
But it's at that point where I certainly wouldn't short it. I would not short it. But I'm not keen on buying it because I much prefer a dip.
Okay.
Let's have a look at the weekly very quickly. Yeah, so look at the weekly. That's a lower close, struggling with this high. I think it needs a dip, at least a dip. Right, I'm off, guys. Thank you very much for spending the time with me. That's great, and thanks for your input.
Thanks, I appreciate that, Mike. Thanks a lot.
Yeah, thanks a lot. Let's see. Well, certainly how we open tonight in the Asian futures. And let's see what these cash markets do tomorrow. Thanks a lot. See you tomorrow, guys. For those of you in the room. See you then. Bye.
Okay, bye.